Welcome back, everybody. We're going to try something new with Three Stock Lunch. Three key stock stories on our radar today. Our team of reporters will give us the news and the moves of the stocks, and then our trader, Heather Brilliant, president and CEO at Diamond Hill Capital Management, will give us her trade. Seema, let's start with you. You've got John Deere.
I do, and the stock is up 7%, Tyler. Lower fertilizer and energy prices really helping farmers in the past quarter spend more on ag equipment. John Deere's biggest business, Precision Ag, grew sales by 55% year over year. However, costs are going up as well. CFO Josh Jepson telling me that spending on research and development is up 14% versus last year, just shy of $2.1 billion, and that mergers and acquisitions will remain key to its broader strategy as Deere continues to bet on artificial intelligence, robots, and machine learning. He says because of the labor shortage, farmers want more tech-enabled equipment that makes them more efficient when they're planting and harvesting. Now, one cause for concern is pricing. After 2 years of price increases, he says prices will likely come down towards the back half of this year as inflationary pressures subside. But that's not stopping the stock from moving higher, Tyler.
Heather, what do you think of Deere? Thank you, Seema, by the way. Heather?
I think Deere is a great example of a company that has tremendous competitive advantages, and investors like us at Diamond Hill with a long-term perspective can see in this quarterly report some of those strengths coming through. They were able to raise prices twice as much as they saw cost increases, I should say. And it's a cyclical business, so there will be bumps in the road. But this quarter is a really great example of the long-term advantages they face with their dealer network and their focus on technology.
All right. Deere shares, as we mentioned, up 7% today. Let's get to AutoNation, also soaring after results. Phil LeBeau has these details. What are we learning about this wacky auto market, Phil?
Not a whole lot from this report, Kelly. Look, nothing's really changed, and that's not the reason the stock is up almost 10% today. It's up because they beat on the top of the bottom line, and on an adjusted basis, they had record fourth quarter revenues. In terms of revenue, what you're looking at is new car revenue, not a surprise here, down 8%, up 8%, used revenue, used models down 8%, but it's the aftermarket services, up 7%, the revenue there. Remember, they get half of their revenue. Generally speaking, most auto dealership groups get half of their revenue, the business, on the service part of the business. That's where they're really going to make most of their money. And not surprisingly, you're seeing all of the major auto stocks. We're talking about AutoNation, Penske, Group 1, all at or near 52-week and really all-time highs, guys.
Heather, what's the trade? Do you like AutoNation? Kind of an under-the-radar stock.
Yeah, it is. It's, they think there's some really interesting things about the company. And certainly, I think the average selling price has really bolstered these results. They bought back 25% of their shares over the last 12 months, which is a really impressive feat as well. Overall, they seem to be doing a great job on operational skill, capital allocation, and the valuation isn't overly demanding. But given all of the trends and unknowns, we're not chasing it up here.
All right.
Well, let's move on to Moderna, which is falling on some mixed results for its flu vaccine. Meg Terrell has the story. Meg?
Hey, Tyler. Well, the question for Moderna, of course, is can it take its incredibly powerful mRNA technology and apply that to things beyond the COVID vaccine? They've had some good results in personalized cancer vaccines and RSV vaccines. Now they're trying with seasonal flu. These were late-stage data looking at the immune response and the safety of their seasonal flu vaccine candidate. And essentially, they found it met the study goals on the more common form of flu called influenza A, but it didn't meet the study goals in terms of the immune response for influenza B. Now, they are tweaking it to update it, but that does essentially look like a mixed result there. Tolerability is very important here as well, what it feels like to actually take the shot. And there, investors are focusing on the fact that there were more side effects, even though they were low grade with the Moderna vaccine compared with the more standard seasonal flu shot. Moderna did say, though, they have an efficacy study reading out by the end of the first quarter, a little ahead of expectations. And when I spoke with Moderna's president, Dr. Stephen Hoge, he said that is really the data set that is going to matter potentially going forward. However, the stock down more than 4% on these sort of mixed results.
Yeah,
guys.
Mixed results, more results to come, it would appear. Heather, what's your thought about Moderna?
We really like to look at everything with a valuation lens. And at $64 billion of approximately their enterprise value, they're going to generate around $7 billion in revenue in 2024, depending on your estimates of some of these pipeline names. That's 9 times sales. At this valuation, despite the potential long-term benefits of their pipeline programs, we're not a buyer.
Too expensive.
Too expensive, yeah. There's so much success that has to go right to justify these prices.
All right, Heather, thank you very much for your time today. Heather, brilliant. We'll have you back. Thanks.